Okay, good day, everybody. Eric Mashinsky from the Gold Investment Letter. I'm pleased to introduce and speak with today Giga Metals. We've got CEO Mark Jarvis and Martin Vydra, also part of the management team, president, director. And today the goal is, as most of you know, Giga Metals has been a good sized, a fairly top three sized to top five sized individual junior resource holding in my portfolio for a while. It is underperformed. Nickel has been in not necessarily a super bad bear market, but I guess you could call it a bit of a funk. And now with gold leading the charge, precious metals starting to waken. What I really don't want to do is chase the hot deal of the day. And in my experience, when looking out a little bit further or keeping an open mind in terms of when something is going to pay off. I leave that outcome on timing up to the markets and stay the course, and that tends to have paid off the largest for me in terms of ROIs. But at the same time, we know it can be frustrating to have a position and keep buying something that either continues to go down or just is dead in the water, which is seemingly what has been happening with Giga Metals for a while. But I believe there's more behind this story to dig into to really, bring my people up to speed on why I'm sticking with this deal and seeing it through. But, it would be great to hear from the gents on the inside, and that's what we're here to do today. So welcome, guys.
Thanks,
Here.
sir.
Well, let me start with you, Mark. So why don't you just tell us a little bit about what's been going on and what is your strategy? I looked up on the Giga website today and was looking at your bio. You've been in this deal for 20 years. All right.
Yeah, it's turned into a labor of love, Eric. Um, it's the kind of play I really like. Just due to its sheer size. I like big assets, and they can be very challenging, but if you can make them pay, they generally pay off big, and that's always been my experience in the markets as well. Um, so what's going on in the company is, as you alluded to, the nickel price has slumped over the last year, and Martin can get into a lot more. I don't think there's very many people in the world that know more about the nickel markets than Martin Vydra. Um, so you can get into that with him. But from my point of view, it just simply has slumped. We're at a price where something over 40% of producers are actually losing money. And so that is, you know, in broad terms, a bottom. It has to be. And so the question is, how long does the funk last? Martin will get into that, but I'm assuming it lasts for, another year, maybe more. Now, there's things that could happen that could change that scenario. But, you know, I'm taking this as an opportunity to review all of our data. And I've engaged a very, very smart, lifelong nickel exploration geologist to put fresh eyes on all of our data. I've always had the sense that we're missing something here. We've got this giant, low grade, low strip ratio, open pitable resource. We've only explored, less than 25% of what I was thinking as prospective within this. I can tell you an area that I had written off. This guy is looking at with great interest. He thinks there's something interesting going on there. So maybe we've explored less than 20% of what's prospective in this. And in a system this large, you could have, something the size of Voisey's Bay hiding in there. It would be like finding a needle in a haystack. It's just, mines like that are tiny physically and then huge in dollar value. So, the question is, how do you narrow the search? And, I think if we're going to be in a down nickel market for a year or so, let's do something other than sit around. Let's take a look at some of our exploration targets.
I like that strategy, and we've discussed this before. the bottom line is we have to zoom back a little bit into the fact that Giga has basically been in the lull of the Lassonde curve phase for what, 4 years or maybe more. More, yeah. So you've got this boring time with a lot of technical work, metallurgical work, feasibility, but it's also critical for long-term value building. And so, Martin, sorry I mispronounced your name. It's Vydra. I want to ask you about, and I know you've got to bounce a little bit early, so let's zero in here with you. Why did you join Giga and the Turnagain asset? Like, you've got a lot of different options, it looks like, in this space, coming from Sherritt and with your background. Why Turnagain? And what is the value here right now that you see in this deal?
Oh, great questions, Eric. Thank you. As you said, I've been in the nickel world for approaching 40 years, and I'm second generation nickel. So I've had the opportunity to see and taste most nickel projects and operations in the world. When I first met Mark, I was still at Sherritt, and I wasn't interested in Turnagain, and I wasn't interested in it for the same reason I'm going to say the entire world isn't interested in low-grade ultramafics right now. It's low-grade. But I didn't really dig into it. When I left Sherritt and joined Giga, Mark first asked me to become a director, and I was happy to do that. And then I started to dig into it, and I said, you know what, Mark? You're marketing this project differently than I would. And I wouldn't market it as a low-grade ultramafic. I would market it as a long life sulfide that'll produce 20% nickel concentrate. And the catch there is I wasn't aware when I first met Mark until I started digging into it that they can produce a 20% nickel concentrate, which would probably, you can't say these things to regulators, but if it was in production, that'd be the highest grade commercial concentrate available right now. Voisey's Bay high grade, which they don't really produce anymore, is about 21%. Most nickel concentrates in the world range from lows of 3, that's Norilsk, to as high as 16, which would be Raglan, I think, or Voisey's Bay. So a 20% containing nickel concentrate is actually a very sweet feed for smelters. So think of the smelters such as Vale and Glencore in Canada, which are every year having to go deeper. Smelters in Finland, Boliden, and the smelters that have gone out of business because they've just got no good concentrate to feed it. But also, it's not just the quality of the product, it's the simplicity of a commercial operation when we laid it out. So, as Mark said, Turnagain is a massive deposit. We really don't know the extent of it, but we've drilled enough to know that there's at least a 25-year mine life. And none of it has to go underground. And if you think of Voisey's Bay, which was everybody talks about the last great discovery, they were above ground for about 15, 20 years, I suppose, and then they had to go underground. And now the costs are going up and they have to go underground. Santa Rita in Brazil, another sulfide deposit, has to go underground. As soon as you go underground, your costs triple. We don't have to go underground. We can stay as a large open pit mine, similar to, say, a big copper porphyry. And that's what we're trying to sell it as. The other thing is that the flow sheet is incredibly simple. We're not talking about, say, HPAL like they have in Indonesia or Western Australia or Sherritt did in Madagascar. We're talking about simple dig it up, crush it, grind it, and then froth flotation, the technology that's been in operation for well over 100 years to recover the concentrate. And the beauty of Turnagain ore, or the resource, is it's one key mineral that contains the nickel, and that's penblendite. Penblendite is the, shall we say, the sweet material that everybody goes for. It's if you could get nickel sulfide, it would be penblendite. And the majority of Turnagain's sulfide, in fact, almost all of the nickel in sulfide is there as penblendite. So that's why we can recover a concentrate as 20%. If you were to compare us to other low-grade ultramafics that are being promoted, none of them are relying on one mineral like we are. All of them are relying on 3 or 4 minerals to get their nickel recovery. So all of a sudden, instead of one circuit of flotation, they need 2 or 3. So now you've tripled your operating and initial capital costs, and you've made it a little bit more complex. So those things made it very appealing to me. And then when I started to look at the cost and the infrastructure, I go, holy cow, you know, yeah, it's a $2 billion project, but show me a nickel project today that's not $2 billion. And I'm even going to say the guys in Indonesia are lying about what it costs them. And I'll find you somebody who hasn't built something that needs everything. So for $2 billion, we're going to put together a mine that'll generate between 35 and 40,000 tons a year of nickel as a 20% concentrate for 25, 30, 35 years. It could be another Sudbury. And the operating costs are going to be fixed because A, we're going to get hydroelectric power. And that's one of the reasons our capital cost is a little bit higher. But with hydroelectric power, your power rate is fixed over that 20 years. And we have no other major cost after power and labor. So yes, maybe every 3 or 4 years we have a labor contract, but we're not dependent on oil price. We're not dependent on sulfur price. We're not dependent on any other heavy reagents. We're just dependent on electricity, which we're going to get from the government. We're dependent on having a good labor force, and we're dependent on building this thing. And it's going to operate, and it's going to produce nickel at less than $4 a pound. And people are interested in that. Let me tell you, people are interested in that. But as you and Mark alluded to, nickel's in a bit of a funk right now.
So let's talk about that. What are the dynamics in the market right now, Martin, that you see? I mean, this whole, like, if Indonesia is lying about their numbers, how do they keep spitting all of this stuff out into the market, and like this supply overhang, where does it go?
So I'm going to say that Indonesia, China are not being completely transparent on their construction and operating costs. I mean, I was affiliated with a Chinese operation in PNG, and I know what it took to build that in 2012. And it wasn't the cost that the people in Indonesia and Chinese are saying. So what we're seeing in nickel is, if you look back at cobalt in the 90s, and you can talk about rare earths, China identified in the 90s that cobalt was a critical element to their economic growth. Where is all the cobalt located? They said, okay, we're going to go to Congo, and they just flooded in a lot of cheap money to develop mines. And basically, the key was they wanted offtake, and they got it. Now you look at the cobalt market today, 65, 70% of the global cobalt comes from Congo. 90% of it is refined in China. They've got a lock on it. They've got all the cobalt they need. They've done the same thing with nickel. In 2004 to 2008, when the nickel price was last, shall we say, long-term robust, the Chinese recognized that they were basically at the beck and calling of Western producers and Western traders, and they realized we cannot be under the knife of Western organizations to get nickel. So they decided to invest heavily in Indonesia. Indonesia was always known as a large resource of nickel, but it was always one of those, well, it's a low grade, you can make ferronickel, it's okay, but it's not really economic. And the Chinese just threw that out. They said, we're going to throw money at it. The government funded a lot of operations at low to no interest rates, non-recourse debt that you could spend many years paying back. And the Chinese companies just started coming in droves. And they said, we're going to invest in the nickel industry in Indonesia. And Indonesia said, hey, that's great, but guess what? We have these laws where our resources have to be controlled by Indonesian entities. Chinese said, that's great. You control the resources. We'll build the processing plants. We'll process your feed, and then we'll ship the material to China to turn into high value added products. And that's what they've done. And they have just continued to expand in Indonesia on the back of cheap, easy money from Chinese government, Chinese financing. When you think of it, these companies can build something in no time because they're not scared to take a risk. And the reason they're not scared to take a risk is the bank's not going to come knocking in a year when the nickel price is down for you to make your payments. If you look at an operation like Mbatavi or Goro, which cost, were originally estimated at $2 billion, came in at $9 billion all in. There's a debt service that they cannot handle, and that's why they can't make money, and they're just struggling under that debt. The Chinese operations in Indonesia do not have that problem. And even at these prices, as Mark said, 40% of production is underwater, and most of it is Western. That production that's underwater is not the Chinese production in Indonesia. They have access to cheap financing. They have the ability to bring in Chinese technical labor, which you can't do in New Caledonia, you can't do in Madagascar, and you can't do in Australia. And they have a different set of guidelines that they operate to. I'm not going to say that You know, we call it dirty nickel. I'm not going to say it's dirty nickel. I'm just going to say they operate to a different set of guidelines that say a Glencore has to operate in Australia, or a Vale has to operate in Canada, and that gives them disadvantage. And I believe their ultimate objective is they just want to control enough nickel that they can supply China Inc. forever without relying on the West. And there's so much material now flooding the market that excess has got to go elsewhere. Western world is just scared to death. They said, I'm not going to invest in nickel because I can get it from Indonesia for $3 a pound. Yes, you can.
So what about the incentive? Like, let's look at the playbook from the 90s on cobalt. I mean, China's doing this all over the world. They've done it with rare earths. We've got the situation with, you know, I'm very interested in vanadium. You know, they've got, when you look at even antimony and antimony, they've got that stuff locked with Russia. 75-80% of any production on the globe, but they don't really share it. They use it. And so what's the playbook on pricing of commodities like nickel, where they're in this process of controlling the market, dominating the market? They don't have an incentive at the moment to raise the prices. It's not really in their interest in the global markets. But if they are a refiner and they get their needs met and they're selling a high quality product at the end of the day, maybe back to the West, is there a point where they would be motivated to actually allow the commodity prices to go higher? Or does that just not concern them that much?
I think it's a bit of both, Eric. I think right now they're more focused on bringing the nickel into China to make PCAM, to make batteries for EVs or even hybrids, so that they can sell very competitive vehicles in the world to compete with the legacy automakers. And if you look back, the Chinese government stated, I think 3 or 4 years ago, that they wanted to become the world leader in EVs, BEVs, battery electric vehicles, and they have. So in order to be competitive, they got to keep the price down. How do you keep the price down? Is they have this integrated supply chain of materials right from the mine to the battery, which is the most expensive component. If you look in contrast to a company such as, say, Tesla or Toyota, they still have to buy their nickel on the open market or price it off the open market. So right now, the Chinese are not motivated to let the price rise because they want to keep the cost of their vehicles low. Once they have a locked-in market share, in my opinion, outside of China on their products, just like every other product that China makes, then they won't be too concerned about letting the price rise to a certain point where they can maximize the profit without incentivizing new production to come on. I believe the price for that is around $25,000 a ton nickel. I think once the Chinese have indirectly, this is not by design if you ask me, but indirectly, once you've seen enough Western production fall off the wayside that the Chinese control 75-80% of the nickel market, you're going to see them allow the nickel price to float up so that their companies can start making money. They don't price nickel within China the same way we do outside. There's a lot of pricing that happens that is back calculated to the battery price. There's a little bit of play in the nickel price in there, but it's mostly what can they sell the battery for. So if you look at CATL, the world's largest lithium-ion battery producer, they buy their nickel sulfate and PCAM based on the battery price that they can negotiate with the car company. Now, some of it is tied to nickel, but what they'll do is force the nickel price down by, shall we say, by osmosis, is the price will go down because they say, well, if you want to charge us for that, we're not doing that. We're going to switch to LFP. And that's right now, that's the option they have. Western Europe and North America, we're still kind of hung up on the nickel battery chemistry. We are starting to adopt LFP, but because of that, you know, the Western car makers are more concerned about the nickel price. I think the Chinese will allow the nickel price to go up slightly so that it makes it painful for Western producers to produce a cheap vehicle. If you look at the Chinese, let's say Huayu, they have their own integrated facility in Indonesia, an HPAL facility to make mixed hydroxide precipitate, MHP, which is a nickel cobalt product, which they then in turn into nickel sulfate and cobalt sulfate. Then they turn it into PCAM, precursor cathode active material, which becomes cathode active material. They own all of that supply chain, and they do that with a Chinese company. So the nickel price is just a transfer price to them. They're not actually buying and losing money along the way. They're making money on the battery. So if if the nickel price is $25,000 a ton, they're not actually paying that to themselves. They're charging that in the battery to the car company, and they might be charging that to Mercedes-Benz or Audi or General Motors. Car companies such as GM and Volkswagen and Tesla have to pay some sort of form of that price. And we've talked to car companies who want to control their nickel price, and we've told them the way you control your nickel price is to be an asset owner in the nickel mine. And the car companies are finally starting to get their head around that. They're starting to get their head around that, and they realize if I want to be able to compete with China Inc. on a global stage, I have to have skin in the game all the way upstream at the nickel mine. And I think it's a matter of time before we start to see a few of those dominoes fall, and projects like Turnagain and some of the other projects in North America will start to get major players funding it and being interested in it. But the car companies are, unfortunately, they have a certain mindset, and they don't have people within their organization who understand the mining industry, and they're scared to take that risk. They're all about risk avoidance. But they're starting to hire people. You're starting to see people that are ex-Trafigura, ex-Glencore, ex-Traxys start to show up at General Motors, Ford, Volkswagen, and they're starting to educate the management and boards of these car companies that it's not really a risk, it's an investment. And I think we're close. I'm not going to say it's months, might be years. I'm going to say it's between years and months. And when I say years, I'm going to say less than 2 years that you're going to start to see car companies start to dive in to some of these mining projects.
Yep. And thank you. And I'll just run with this a little bit just for your timing's sake. So what do you see then on the nickel market pricing going out, let's call it 6 months to 24 months? Do you have a handle on just what's coming into the market where you can see that alleviation actually in the supply demand dynamics where we could float back up towards 25,000 a ton, which then, at around those prices, Turnagain's back in play, right?
Yeah. So I'm going to say within 18 months, we're probably back to $20,000 a ton. And I'm going to say you can quote me on that, and then you can throw that in my face or applaud me in 18 months. I can say that's on the back of Western world closures that are taking place right now. So in the last 12 months, we've seen serious closures from legacy nickel producers. So BHP has basically announced that they're going to put Nickel West on care and maintenance. This is, a massive nickel operation in Western Australia that's been around since 1968 in former lives. You're seeing the Mbatavi joint venture in Madagascar. They just had a failure of a slurry pipeline, which I think is causing their owners to say, do we start up? Because it costs us $30,000 a ton to make one ton of nickel, and we're only selling it for 16. You're seeing Prony Resources, which is the Goro operation in New Caledonia, has not been in operation since May because they cannot produce a ton of nickel for under $25,000 a ton. You're seeing Glencore announce that Koniambo is not going to be funded in New Caledonia anymore, which means that operation is in danger of shuttering. And you're seeing Anglo American, despite some of their recent investments in juniors, pulling out of nickel outside of their byproduct nickel in South Africa, which is fed by their platinum palladium operations. Most notably, the Barrel Alto operation in Brazil, I understand, is for sale. So you're going to see about 200,000 tons of Western world nickel come off of supply in the next 18 months. People say, yeah, you can pick that up in Indonesia easily. Yes, but the form of product that's being brought into production in Indonesia is mostly MHP and ferronickel. You're seeing a drop-off in Class 1 briquettes, which are a huge driver to the chemical industry in the Western world and to the stainless industry. You're seeing a drop-off in high-grade ferronickel in Koniambo. So what's going to happen is the premiums, say, for nickel briquettes are going to skyrocket. We've gone from a situation where we had 6 nickel briquette producers 5 years ago to 3, and 2 of them are pretty well untouchable. Those being Sherritt, which is Cuban, and the other one being Norilsk Harjavalta, which is in Finland, and nobody touches that anymore because of the Russia-Ukraine conflict. So you've got Impala Platinum, you've got Impala Platinum byproduct nickel in South Africa, which will continue to produce forever, but most of that production will go to Japan because of the duty-free status. And you've got Glencore in Murrin, who, lo and behold, Glencore are going to be the only nickel briquette producer in the world. Can you imagine what's going to happen with those premiums? So you're going to start to see incentive pricing for somebody to do something. And I think a lot of Western companies are going to say, I don't like having all my eggs in one basket and relying on Chinese nickel. the Chinese to get nickel. I've seen it happen in solar panels. I've seen it happen in rare earths. I've seen it happen in cobalt. I don't want it to happen in nickel. And I think you're going to start to see some investments in projects, and they have to be on the terms that the Chinese have invested in Indonesia. So you have to have some sort of government-backed funding, which will say, we're going to give you a low interest rate and we're going to give you a long grace period to pay this back. And the Japanese are very close to doing this. The Japanese have funding from JBEC, the Bank of Japan, for some of their projects, as long as those materials go back to Japan. And as you're well aware, one of our partner is Mitsubishi Corporation, largest company in Japan. They decided to team up with Giga Metals on Turnagain, not because we gave them a great presentation or a great slideshow, because of all of the items I've talked about technically, and the fact that they studied every nickel project in Australia and North America and Europe that was in a, call it a tier 1 jurisdiction to invest in, and they decided to invest in Turnagain. So that tells you a lot about the robustness of our project. We're suffering from as you say, we're at the lull. We've got a bad nickel price, which has unfortunately impacted our market cap and our ability to perhaps, fund the things we have. But from a technical point of view, and take this from me, somebody who's been in the nickel industry 40 years, the best technical low-grade sulfide deposit out there is Turnagain. I wouldn't be involved if it wasn't. And if the government of Canada were to give me a $2 billion loan tomorrow at 2.5% over 20 years, they're going to make that money back. Plus, we're going to pay them $2 billion in taxes, royalties, and knockoff jobs over those 20 years. They just don't have the guts to do it, and the Chinese government does.
Got it. So, question for both of you then. I'll let you, you can pick if there happens to be a favorite or comment on all of them, but let's just talk about comps. So, we've got, despite this terrible market, there have been some things happening for some of the juniors. We've got Power Nickel, Canada Nickel. So Power Nickel is $150 million Canadian market cap. CNC is at the $184 million level. And even this little EV Nickel, which, is trading at a $60 million market cap, where Giga is sitting here at 14 million, with, Mitsubishi taking a stake, writing a check over 2 years ago, when this was valued at 53 million Canadian, if I recall. So are you familiar, I'll start with you, Mark, with what is, like, what do you see there? Like, what is Power Nickel and Canada Nickel? What do they have that's so special that's going to end up valuing them 10 times Turnagain?
Maybe I'll jump in on Power Nickel, because I've been looking at that one, Eric. And I think that Power Nickel, it's a discovery. It's a new discovery, and we don't know how big it is yet, but it's a polymetallic discovery. And in fact, most of the holes I've seen are primarily copper, but there's copper, nickel, I think there's silver, there's platinum. It's polymetallic, primarily copper. And frankly, I think it's an exciting story myself, because it's new. I mean, it's an old property, but they've made new discoveries on an old property, and they're still trying to figure out how big it is. It'll be an underground mine, and it's got the grades to support that. So, I mean, there's room for everybody. I don't know if it's going to end up being as much nickel in the ground as what we've got. That would be a stretch, but it's quite high grade, and it seems to, they don't have a maiden resource yet, but as I follow the drilling, it seems to be connected. I think it looks like they'll be able to connect the dots. So, I actually, I don't have to say that we're better than that, because it's completely different.
Look, I mean, you're being complimentary, and that's fine. That's great. But you're also looking at a situation where my theory is, or thesis is, like, it doesn't deserve a 10x valuation when you are already at the 15-yard line in terms of getting to a mine development stage at Turnagain with this size. There's a lot of time and money that's gone into that. Martin, any commentary on either of those?
Well, I think Mark is right. I've looked at Power Nickel's drill results. I think the word is sexy and exciting right now. You don't know what you got. So there's a lot of gambling going on, a lot of faith. So I personally am curious to see what Power Nickel comes up with. It is polymetallic, which gives you a lot of products to value, but a lot of products to treat and recover. If it is underground, that'll be another complexity. But it could be a major play, which is good for it. With regards to Canada Nickel, which is Dumont 2.0, as we call it in the industry, it's, Mark Selby, a great guy. I've known Mark a lot of years. Canada Nickel is different to Turnagain in all the things I talked about earlier. First of all, they have multiple mineralogies of nickel that they're trying to recover, not just pentlandite. If you see, both Canada Nickel and Dumont are now looking at value add downstream processing their ore, because they recognize that getting the value upstream is just making the economics challenging. I think, Canada Nickel, Dumont, some of these guys, they have a resource there. My issue with that is that it is a complex resource, and I've seen the flow sheets for both, and I've talked to major players who have kicked the tires, and these players kicked our tires too. So they're not satisfied with the with the flow sheet or with the due diligence engineering work done to date. They want to see more. Having said that, they say the same thing to us. They said, we'd love to invest in Turnagain. Can you guys be further down the road in your work? Can you have your feasibility study done? And we said, absolutely, we can have our feasibility study done. Can you write us a check for $30 million? So it's a chicken and egg thing, right? And luckily, there have been no surprises on Turnagain in terms of what you're going to get. And when we went from our PEA to the PFS, which is actually an increase in confidence, the flow sheet didn't change, the recoveries improved, and the capital cost actually went down. When you look at some of our competitors, when they go from PEA to PFS, or even they say full FS, there's still a lot of unanswered questions, and any project is only as good as the economics, Eric. I can plug any nickel price I want into our project and give you the economics you want. But one thing I won't tell you is that I'm making a product that I'm selling into a market that doesn't exist at a price that doesn't exist. And unfortunately, the Securities Commission, after, with the 43-101, they are so hard and difficult and scrutinous on resources and what you can call a resource and an ore and a reserve. And that's great. You have to have QP sign off on anything. The marketing sections don't need any of that. They have a QP, but nobody actually looks at that and say, Company X is making a ferronickel product and selling it into a North American market. Now, wait a minute. The Chinese are selling that product for 75% LME into China, but this guy says he's going to sell it for 90% of LME into the US. Wait a minute. The US doesn't buy this product. So how does the economics work? And people don't get that. They just, oh, wow. And I don't mean to point fingers, and I think it's up to every investor to take a look and do the scrutiny, but these projects have a great market cap for various reasons. We're not sexy. We tell the truth, and I think that's why Mitsubishi liked us. We told them at 750 nickel, our project probably isn't getting developed, but nobody should get developed at 750 nickel. And I'm being honest, right?
Yeah, right.
At $9 nickel will make you money.
Right. And Mark, so what about exploration? Go trickle some high grade. You know where it is on this big project? And is that something that is in the works or potentially for 2025?
I'm getting a report, I think, within days from this expert that we've hired to review all of our data. I mean, we've got like 400 drill holes. We've got geochem surveys. We've got all sorts of geophysics over the years. But some of the geophysics, I mean, since the last time we really did it, the technology has improved so much. And one of the things we never did was a gravity survey. But now, apparently, I've had two experts, including this guy that's looking at our data again, tell me, you've got to do a gravity survey. So he's got ideas, and I guess I'm just going to have to wait to see his final report. But I've always had the sense, I mean, we drilled a hole right back in the beginning, like right in 2004, that was 20 meters of 1% nickel. And frankly, that's the hole that got me into this thing in 2004. I just went, okay, if you've got this big low grade cloud, and if you can find some high grade somewhere within that, then you can build a mine that doesn't depend on the nickel price. You can get the cash flow going, and you can use your small high-grade mine to get the big project off the ground. And that's always been true. It's just easier said than done. As it turned out, that 20 meters of 1%, we drilled around it. There was nothing to connect the dots to. But we've had other sniffs of high grade here and there. I don't understand what controls that kind of mineralogy. That's what this geologist is looking at. And so I'm afraid I just have to wait until he gives me his report, which I'm expecting quite soon, and see what he comes up with.
Cool. Martin, you've got to bounce. Let me ask you just on closing here. Would you like to see some high-grade exploration mixed in here to sex up the story if it validates it? And then any closing thoughts on Giga Metals, and why should people still hold this thing when it's been a dog in the den?
Yeah, absolutely. I think looking for high grade is going to be a way to convince the market that we're not this low grade. And we're also looking for other byproducts besides cobalt. There might be copper, there might be some PGMs. We've had sniffs of that. You just don't know until you drill. And I think it's worthwhile, money well spent. Why Giga? Why Turnagain? Well, I think the only thing I can say is, again, I'm beating a dead horse. I don't know many people in the nickel industry that are probably more knowledgeable than I am. And one of them works for us by the name of Lyle Tritton, but I know everybody in the nickel industry. I chaired the Nickel Institute for a couple of years. I'm familiar with all the technologies. Is Turnagain the best? No, I'm not going to say it's the best. It is a rock solid investment. And if the Western world gets its head around and saying, we want our nickel that comes from a place that's not China, that's going to be almost carbon neutral. And I didn't get into that. There's a ton of stuff on our website about how we aim to achieve carbon neutrality, how it's going to meet, world-class ESG standards on every aspect. Then why wouldn't you invest in Turnagain? And I say, I would invest in Turnagain. It's also on the West Coast, so we're very close to the Pacific Ocean tidewater. So if there's not a market for our product in North America yet, it can go to Asia. And that's another thing people don't realize. We're not making PCAM in North America, and we won't be making PCAM in North America for at least a decade, because North American regulators cannot get their head around what to do with the sodium sulfate solution that is a byproduct of PCAM production. You can dump it in the ocean because it essentially is inert and a part of the ocean, and that's what happens in Japan, Korea, China, Vietnam, Taiwan. They can do that, and it doesn't hurt the ocean. You can't have PCAM production around Lake Michigan. You would kill the aquatic species. So even if you had battery production in North America, you got to get the PCAM from Asia. We can produce the product that'll go out of, say, Stewart or Prince Rupert, ship it to Asia, make PCAM, and then ship it back. So I don't know if I answered your question, Eric. I would, if any investor wanted to know more about why, I would be happy to tell them why. And I would be happy to tell them some real honest thoughts off the record about why I think some projects are being promoted when there's not a hope in hell of them getting off the ground.
Good, Martin. I appreciate that. Thanks for your time. We'll let you run to your appointment. I'll close up with Mark.
All right. Thanks, guys. Take care.
Yeah,
Cheers.
thanks, Martin, for doing this.
All right, Mark. So let me just set the table a little bit. As a long-term shareholder in the deal, I'm seeing this issue with a number of different companies. Whereas, say you go into this gully, and China's got a lot to do with this stuff. We know that, but the question is, how and when can investors optimize returns on this stuff in the commodities prices, in the assets that have been neglected, ignored or avoided for decades, yet subtly and slowly have been invested in and built. I always say to people, like, the thing with Turnagain is people are going to all wake up seemingly at once, like they always do. And you just don't find these things laying around the street everywhere, right? They don't exist. I mean, there's a handful or two of these type of things on the globe that could even potentially be in play once people decide, or corporations and governments decide, that they need to be in play. So my view on this is that, yes, we want things to happen fast when you're in a company and you want things to start to pop off. In my opinion, we have to let this come to us, because you have a conundrum in the sense that we know that there is value in somebody who came 2 years after Mitsubishi to pay a higher price to get into Turnagain than Mitsubishi paid. Yet, if you're looking at just a 50% increase from that level of Mitsubishi buying in for 15% of Turnagain, that's 5 times higher than our market cap. So anybody who's going to look at doing a deal with you, or in my opinion, just says, what are you talking about? Like, you're not a private company, so I can get a quote on what the market is valuing at you at here. And this may or may not be the case with certain automobile companies, but if it's a mining partner, I think that's an issue. And then they'll lowball you. And I think you've probably experienced this stuff in the last 12 months. But my thought is, like, look, you focus on talking about and bringing in a bit of a new investor base. Maybe it's a new angle on exploration, drilling, and things of that nature. You need a firmer stock price to even really want to seriously engage in giving another piece of this project or corporation away, like with regard to anything near what you ultimately, I know, have as a goal to divest this project, because I know you don't want to become a mine builder. I don't want to see you through that process. I mean, it's more of, this thing is a bread and butter, build it up, you get an M&A transaction, you're done. It's a big exit for everybody. That's the theory. And my opinion is, as long as it takes at this point, when they start coming around, sometimes you just have to pause, focus on what you can control, and just say, look, we're not even going to talk to any of you guys right now. And when you come back, if you don't want to do something now, we're going to rip your eyeballs out. Like, you are going to pay a massive premium, and we are not going to give up this company or this asset for nothing. So what are your views on, I said a lot there, but what are your views on the conundrum that we find ourselves in?
Okay, there's a few questions in there, as you say, Eric. I'll kind of take them one at a time. So for one thing, when the nickel price is at a price where more than 40% of producers are losing money, I can't imagine a better entry point in terms of the commodity itself, and in terms of anything that depends on the commodity price, like us. And because we depend on the commodity price in our current configuration, everybody does, whether they admit it or not. We depend on the commodity price to become something that's of interest to build. The price will come to us sooner or later, because what Martin didn't talk about is demand growth, and demand growth is still going along at, I think it's CAGR for nickel is 8 or 9% compound annual growth rate. That's a blistering pace of demand growth. And so far Indonesia has been able to keep up with that. They won't be able to keep up with that forever. Their grades are dropping, for one thing. So, and in terms of the conundrum of our market cap being an impediment to dealing, and it definitely is, you're absolutely right about that. And I've got experience of that. I walked away from a mining company that wouldn't pay up to our price. They did a ton of due diligence. They spent a lot of time on it. And then they said, okay, well, we're going to value the project at this. And I said, no, you're not. I would rather, frankly, rather than sell a piece of the asset at the wrong price, I would rather sell a private placement in the company. And there's two reasons for that. Even if I don't like the price, we recently did, as you know, a small financing at 15 cents a share with warrants attached. So two things about that. Everybody that buys that has the same incentives that the company does. We all want to sell this for the highest possible price. And the other part is, all of the leverage is in the asset itself. So if I give away a piece of the asset at something close to our market cap, I'm giving up my leverage. And I would rather dilute the company at that point. I'm willing to dilute the asset if it's at a substantial premium to our market cap. And if potential buyers don't like it, too bad. I've walked away more than once. Now, something else I want to say, I mean, Martin alluded to this a bit, but the car companies, I don't think they've really come around to the view that they're facing an existential threat from China. Like a lot of the legacy car companies, 10 years from now, they might all be bankrupt. It's that serious in my view. And if they don't do what the Chinese have done, which is take control of the supply chain and, know for decades to come what their raw material supplies are going to be costing, they can't compete with the Chinese. And so the car companies all piled into the electric vehicle space at the same time. They produce a lot of cars. They produce more cars than the market could absorb at prices that the market wouldn't pay. And now they're all licking their wounds. And so they had irrational enthusiasm, and now they're going through irrational fear. And I just say to you, if they are going to survive, they're going to have to come to a realistic assessment of where they sit in the competitive landscape. So, and then, the one other thing I will say is we've always got conversations going on. The car companies, we had a couple of car companies that we were quite advanced with, and then they went away. They freaked out because the EV market wasn't absorbing their automobiles. But right now, we've got, and I won't get into any details, but we've got two conversations going on that I consider serious. And that's no guarantee that anything closes, of course. I was very hopeful, and particularly one of these car company conversations we were having, it didn't work out. But there is serious interest right now from two companies. We'll see where it goes. So what other questions? You asked a few questions there. I've lost track.
Well, no, that's fine. It was about the whole, how do you go about all this? But something I want to bring to people's attention too is like, when you said you can't imagine a better entry point, I think that that's really important for investors, where you step back from the timing of something, and you let it come to you. What in my experience happens when I'm too early to a deal, but I stick with it and I know that it's eventually going to pay off. All of a sudden the sun comes out one day. You don't know what day it's going to be, but also we have, in capital markets, including commodity prices or whatever you want to talk about, generally, I believe the markets are a forward-looking mechanism. Is that a 9-month period of time or a 12-month or a 6-month or, 15-month period of time? Somewhere in there. And so, things will start to improve in the nickel spot market, in trading of nickel producers. That'll start to show some life well before we actually have the dynamics come in to what the market is seeing in the future. So keeping that in mind, this isn't something where we need news to come out to change the nickel price and everything else. The market will see that coming. And so if Martin's right and it's 18 months out to be back at 20,000 a ton, then this whole thing could come back into play within the first half of 2025. And my guess is, just like you said, you have extreme elation making bad decisions, extreme fear making bad decisions, and it'll round out, and then all of a sudden everybody will be back at the table at once, and it's going to be more of a clamoring. That's the next phase. Whether you get that done next year or the year after, I mean, I believe that the exploration part of it is great. It's also something that we do want to cheer on, the Power Nickels, the Canada Nickels of the world, because quite frankly, if I was running those companies, or I was a large investor in either one of them, which I am not, or if I was a director, if their market cap continues to go higher, where it's like, one of these is 20x Giga, I'm literally telling the board, we need to secure our future and buy this Giga Metals out, even if we have to pay a 300% premium. You know what I mean? Like, because we could use our paper. I mean, whatever. Those are candidates if it gets, further stretched, where, that isn't on the top of mind when they've got their new deals. But that is something that I wouldn't say couldn't happen in the future. And we'll see.
Yeah, that's honestly, from my perspective, that's something I hope doesn't happen.
Yeah, me too. But, I mean, hey, at the end of the day, if it comes down to it and we're trading at 20 cents, and then all of a sudden, like, we're not seeing any hope with anything changing from a macro perspective, and all of a sudden you can get this thing in play and sell it for 55 to 75 cents. It's the worst outcome, in my opinion.
Yep.
which is why I say that this is one of the biggest no-brainers I've ever seen for at least a 5 to 10x from here. Because if we get any normalization in conversations and pricing of nickel back above $9, like I don't see how you don't, get a deal done on this thing between at least $1.50 and $2 Canadian. And I know you agree with that, or even feel like it could go higher.
Yeah, it all depends. I mean, the leverage is so phenomenal to the price of nickel, just with what we've got right now. And if we could get something high grade within this, and it's just a massive system and it's all mineralized. And by the way, one of the remarks that this gentleman has made to me is that he thinks there's a possibility for a high grade copper deposit in this mineralized system. The part of the system that I had kind of written off, he's looking at it with great interest, and he says, I think this area here is trying to form a copper deposit, and he's got some ideas about how to explore for that. When you explore, you can be right, you can be wrong, you know what it is, it's hit and miss. But the thing that's wonderful about exploration is on any given day, if you've got drills turning, you could
Yeah.
find something monstrous. And that's kind of what gets the blood going in the speculative market. Another comment I'd like to make, Eric, is I think you and I have a very similar approach to investing in the junior market. And I am personally a big time punter. I've got a big portfolio of junior mining stocks. And I generally find projects I like and management I like, and I almost always buy it and then end up having to average down. I never seem to catch the bottom when I make my first entry. And I do average down. And sometimes I'll just go to sleep on it for 3 years, 4 years, 5 years. And then one Tuesday, I wake up and the thing has taken off. And it happens enough that it keeps me going,
Yeah. Yeah. Let me do this, Mark. Well, so we don't make this too long for everybody. Let's wrap up with one question and one thing I think people would be interested in. So you've had me in your ear now for a while and encouraging you, because there really hasn't been anything outside of some very modest traditional marketing or IR for Giga's story. There hasn't been a concerted budget and push to get a new flock of investors to hear this story in a new way. But you've committed to getting some marketing going, and it looks like, or from what I can tell, you actually have you've got several things in the queue and engaged, and you are prepared to spend a good chunk of the financing recently that was raised on marketing and engagement and awareness over the course of the next 6 months. You've got some things planned, right?
Yes, I do. And in fact, we're already starting to do some things, but I think you'll see some announcements this week, actually, that will kind of underline what you're saying. I mean, this is a market that stocks succumb to gravity if you don't do anything to counter that. And I know that I've been in this game for a long time. And so sometimes you have to spend money marketing to make money. And I'm a big believer in that. I know you are, and you're going to start to see that.
Yeah, I mean, it's got to be done on worthy ROI type causes. But the thing that I see here is that there's just such a big disconnect in value. So, and you also have at this point, a lot of us that are in this deal are in the deal. And so, it's not going to take all that much new buying for this to go back to 20, 25 cents. So, I just think any sort of that tailwind for a small company and a small market cap like this could bring us into that. At least we're somewhere we have somewhere to build from, which is like back in the 20s, and then we start to see something. So I believe the things you have in queue that I know of should help with that. So let's see, guys. Mark, that was really helpful. I think a lot of people will enjoy absorbing this from yourself and Martin. And I, for one, I continue to chip away. I bought more in the private placement. I believe I own 2.5% of the company or so personally. And as long as things stay cheap, as I have other things that are hitting, I'll continue to build that position and wait for the payday, which should be big if I'm correct. I don't know exactly when it's going to be, but to me, it's a very likely outcome for us in Giga Metals. There will be a day that comes and we will be paid.
I believe that as well. So that's why I'm here.
All right, Mark. Well, hey, thanks so much for your time today.
Eric, thank you so much.
Cheers.